give us your sense of the markets at the moment, where we're seeing the JSE slowly starting to pick up once again.
Yes, we saw earlier the morning when we opened and Asia closed down, that we were really mimicking what was going on there, and some profit taking based on the gold price moving back a little bit, and then all of a sudden, within the past hour, we've seen the market starting to pick up again, to still below yesterday's close, but closer to that level. And also we saw the FTSE also started off the same way, but is now above yesterday's closing level. So perhaps people still in the market at the moment.
Well, we do have all eyes on that gold price. Many saying that the next 2 days will be crucial in seeing if gold prices can actually keep above 1,000 or not. What's your view on where we're headed?
Well, I think the gold price really is an anxiety indicator, an anxiety against the US dollar and what's happening there. We saw that the United Nations came out saying that they would prefer to have a net reserve currency of a few currencies, and then also China coming out and saying they're not sure about what is going on in the United States, they're not sure about the policies and their recovery there. So we've seen that people going back into gold and as an alternative, as well as other currencies such as the yen, as well as the euro, as well as more riskier assets, currencies such as the gold, rand price. So we're seeing a major pullback there, and as you know, it doesn't translate with the physical aspect of things, but just going to show that it's just a hedge against the dollar, an inflation hedge, a hedge against the dollar, and people looking for alternatives in the currency market.
Let's take a look at the rand strength here, because that gold price has offered quite a bit of support to the local unit. What are you making of that strength? And is it sustainable if we see the gold price coming back down on, as investors' nerves start easing about economic recovery in, on a global scale, and if we see physical demand slowly starting to pick up as well?
Well, I do believe that, rand has got a lot of other factors in there. We are an emerging market, so it depends on what investor sentiment is towards emerging markets. There is a lot happening. We've got, potential merger and acquisition activity in South Africa coming up, FDI investments happening, and then we've also got the 2010 going on next year. So whether it's sustainable or not has got so many factors in it, and it's not just gold. Yes, gold has spurred it quite a bit of late, but it also is the emerging market story, and sentiments towards risky assets, improving there.
Well, Ntombenhle, with sentiment playing a pretty big role here, let's look at this business confidence index report that's just come out. The results from that, we've seen a third quarter, confidence falling 3 points to 23, which is the lowest level we've seen in 10 years. Was that pretty much what the markets were expecting? Yet another decline?
Yes, we were expecting yet another decline. I mean, when we looked at the GDP numbers earlier on, when they came out earlier on, manufacturing was very low as a percentage of, as a contribution to GDP. And we expected that, these business confidence numbers will come down quite a bit. I mean, and it's really a supply and demand story. If the demand is not there, consumers are not coming back into the market. They still are suffering from high debt levels, even though interest rates have come down. They still have a lot of debt to service, and it just shows that business in terms of wholesale, resale and manufacturing are taking that into account, and are actually realizing that it will be a long time till the consumer recovers, and just shows that there is a bit of doom and gloom in that sector.
What's interesting is that if you look at the retail segment here, I mean, we've seen the points there decline from 47 to 35, and many saying that it indicates not only the drop in sales volumes, but the fact that we've seen a drop in selling prices, which affects the prospect for profitability for these retailers moving forward. Do you see the retail segment in the market today reacting at any, in any way to today's numbers, based on the fact that earnings moving forward might not be as bright?
Yes, I think we will see a pullback in those stocks, those retail sensitive stocks. But I mean, when you speak about that, I just automatically think of the vehicle numbers, that came out that was so low, but vehicle prices have not changed, So we're trying to see there. Well, what we expect to see is some kind of mitigation that goes on there between the retailers as well as the consumers. So it just goes to show that the times are tough at the moment. That retailers, whatever reaction they will have to the situation that they're in is so dependent on what the consumer will receive of that. So consumers not getting involved and retailers having to suffer for the consequences.
Yeah. Of course, retailers have weathered the down cycle pretty well, through it all, looking at, headline figures. But the fact that we've got confidence dropping in the retail segment, as I said, from 47 to 35 points, but manufacturing sentiment picking up from 11 to 22. To what extent could we possibly take this as an indication of at the beginning of the turn in the cycle?
I think manufacturing is also dependent on the international markets, far more than what the retail aspect of that is. So what we're seeing there is maybe, a return of confidence as to what is going to happen in the international market and what will happen with the export sides of things also. So I think that's just, a litmus for what investors expect with the world economy going forward versus so much with the local economy.